This is Ag Matters PM from the Iowa Agribusiness Radio Network, your daily recap of the information that affects Iowa's farmers, producers, and consumers right here in the heart of the heartland. With reports from our award-winning team of Dustin Hoffman, Riley Smith, and Mark Magnuson. Now, from the IARN studios in Des Moines, here's Mark Magnuson.
Hello and welcome into Ag Matters PM on the Iowa Agribusiness Radio Network. I'm Mark Magnuson. Today is Friday, December 12th, 2025, and we're so glad you can join us for today's show. In today's episode, I will be joined by Kaden Sweeney of agmarket.net to wrap up the closing markets for today and for the week. But first, it is my discussion with Lynn Justesen of UPL. Mark Magnuson for the Iowa Agribusiness Radio Network, and I'm joined today by Lynn Justesen of UPL, and we're here at the NAFB convention in Kansas City, Missouri. And Lynn, when I think back to the growing season in Iowa this year, it was pretty much all about disease pressure. We were at the State Fair in Iowa this year at our setup. Every farmer that stopped by wanted to talk about disease and specifically about southern rust. So when you think about this year as a whole, was that kind of the theme throughout the Midwest?
It was once it showed up in July, right? I mean, up until then, we spent a whole lot of time talking about tar spot. And tar spot has been one that's grown over the last 5 or 6 years, starting in northern Illinois and Wisconsin. And then now we've seen it everywhere, and we've seen it in Iowa in particular. The thing is we saw it as early as May this year, which not that uncommon, quite honestly, if you know where to look. The thing is that we talked a lot what we talked about, but the disease triangle and the environment it never manifested. So we just didn't see it as much. Now, there are some pockets in northern Iowa, up near Sanborn and up in that part of where we still did see the tar spot come in pretty good. But the big one, as you said, is southern rust. Southern rust comes in almost every year. But for us, typically in Iowa, it's late enough, and you usually don't get the full brunt of it. The jet stream usually drags it west to Iowa, makes things a little bit easier, right? I mean, we just don't see it as much. This year was quite the opposite. It came up the Missouri River, eastern Nebraska, all of Iowa, western Illinois, up all the way into the South Dakota and Minnesota. And we usually don't see that. The thing is I'm sure you saw, it was devastating where there was where there wasn't a fungicide application made. 30 to 50 bushels is not uncommon. Again, just comes in and devastates things. But either one of those two, we really want you to think about a fungicide just a little bit differently. It's not like a herbicide where we can see it, diagnose it, and then stop it, right? Fungicide is not that way. If we've already seen it, we've lost part of the battle. And I think that was really the cue to me that you have to be ahead of this and you have to prevent it. Because all of those things that the places that prevented it as part of their program, they may have had to make a second application for the southern rust, but those guys were way, way ahead because they defeated it very much early. And then the other thing, when you do that and you are making a fungicide application, really be mindful of the label. And as you start thinking about loads, so I think about something like Xylera FX from UPL. It has 104% of the curative standard use rate, 110% of the preventative, and has 110% of the curative already in it. So it's 100 plus. If you do that, all of a sudden now you have something that's way more robust, one. And two, what we talked about with southern rust this year is just that we need that for that longevity, right? We want to have it hang around 28 to 35 days as best we can. We've also added to that this year and had a really nice focus on a third one and adding a third mode of action to that, and that is Vaxaplant. It is the only P04 frat-coated fungicide in the corn and soybean market. Another unique part, it's a biofungicide. So it's a biological, fully frat-coated, fully labeled from the EPA. We add that and we tank mix that in with the Xylera FX. And what we have seen is, even in lieu of disease, we see a nice yield bump to the point where you're still advantageous at 2x plus from what it costs to make the application. Where you see the disease pressure come in, the Vaxaplant really helps from the inside out. We all know how the two-stage and the curative and preventative work as a foliar fungicide is protecting the outside of the plant. The Vaxaplant actually gets in it and triggers internal defense mechanisms within the plant, in particular ISR and SAR plant pathways that help the plant defend itself from the inside out.
So, Lynn, I know as well, UPL very excited about new glufosinate technology. What makes the new technology that you're working on different from some other traditional products?
Yeah, no, Interline Mega is an exciting new one, and it's pending EPA registration. We don't have that yet. But how ours is different is this, a couple of things. One, it's a standard use rate. If you're using 36 ounces right now, you will use 24 ounces going forward. It's a 55% of the standard use rate. So whatever you're currently using, times it by 0.55, that becomes your new standard use rate. And we just feel like that is a great way to really simplify it. It doesn't matter if it's corn, soybeans, cotton, canola, it's all the same rate. The other part of that goes with that is how we do that is within a standard glufosinate, there's an L isomer and an R isomer. The R isomer is racemic, has no activity. We, through our patent pending ultrafiltration process, we can pull 98% of the impurities out of that and give you a very, very 98% pure glufosinate. What that means is this. One, a pure formulation, we see as much or more control depending on the weeds. The other thing that we've seen with it is it also gives you the ability to tank mix with the right adjuvant for the right weed, for the right time, for the right environment. And we've given you, as a retailer and a grower, a lot of flexibility to make sure that when you put Interline Mega out, you can get the most efficacious control as possible.
And you're talking about that getting through EPA registration. Do you have a timeline on when that should be available?
Should have already been registered. Some of the things we've had within the government and the shutdown, it's pushed it all back, but we're hopeful we'll have it yet this year for 2026.
He is Lynn Justesen with UPL. We are at the NAFB convention in Kansas City. Lynn, is there anything else you'd like to let our Iowa growers know about when it comes to UPL? Anything you're excited about?
Yeah, probably one more thing, and I want to add it real quick, is the one we've talked about is some of the weed issues that we've had on the fungicide. The other thing that's been a real driver is the grower finance. UPL has stepped in that game with the grower finance. We have options available for that. Please just reach out to your local retailer to find out what those options are. The other one you could always go to find out more information is uplcorp.com/US to find out more information.
Lynn Justesen, my guest here today at the NAFB convention. Thanks so much for the time and have a great rest of the show.
You too. Thank you.
Thank you to Lynn Justesen of UPL for joining today's show. It is time now for the closing markets, and I'm joined by Kaden Sweeney of agmarket.net. Kaden, what did we see in the trade in the grains today to cap off the week that we started with the WASDE report?
Yeah, unfortunately, pretty crummy end to the week here today. Just one of those deals where, we had plenty of selling overnight, especially in the bean market. We were down 8 or so at the pause at 7:45 this morning, and then really just sold off pretty steadily all day. And beans wound up dragging corn lower as well. So corn going into the weekend off 5 or 6, beans down, 16, 17, just kind of a crummy day overall, felt yucky. Certainly one of those deals where I think the trade's looking to fill the soybean gap, which we're getting, within a dime or so of reaching, and hopefully we find some footing there. But, over the last 5, 6, 7 trading days, it's certainly been a bloodbath, especially on the bean side.
So we have a little bit of a thud to end the week this week. When you think looking forward, what would be those cases for some potential bullish news that would get us back in the positive direction in the near term?
Yeah, generally this time of year becomes a bit of a snooze fest just because of, lack of fundamental data. The WASDE report, like you mentioned at the beginning of the week, December usually is just a reprint in November, so you usually don't get many fireworks there. And then you obviously have plenty of holiday trade in and around here. So generally this time of year is not really big on news. Everybody will have the the January WASDE and quarterly stocks report circled, which will be somewhere around January 12th, depending on what day day of the week that falls on. But really, that's the next big one. All bets are off the table for that one. You could see a big yield cut that could get things going again. That's probably, within the biggest realm of possibility, so to speak. But the average trade guess for that report is going to be plenty wide where yield wants to go from there. But to answer your question, the next week or two, I think we're going to be largely just technical money driven trading wise. I don't think we get a lot of fundamental data that really gets things moving one way or another.
In your job as an analyst, has it been frustrating here recently trying to wait for all of the export sales numbers, all of that data to catch up from when the government was shut down and trying to get those reports back up to speed?
Yeah, it's a little bit tricky. And when it was happening, when the government was shut down, it was certainly frustrating because we had no clue where the funds were at as far as positioning and if they were net long, net short. Obviously, they were buying beans in that time, but we didn't know how many. That was the most frustrating part, although it was a little bit nice to kind of tune out the noise and just pay attention to price action a bit. But, at that time, we kind of had the feeling that China was in buying beans. Nobody really knew it yet, but we were pretty sure they were there, and kind of had the feeling that, once the government got opened back up again and things started coming through the wire, that maybe when you kind of see buy the rumor, sell the fact sort of deal where, we were rallying so hard when the government was closed. And then when the government opens and tells us why we were rallying earlier, we start selling off. So again, nothing for sure, nothing's easy, when China and the government are involved, but I guess playing a little bit, to that blueprint so far. And like you said, we'll get caught up here shortly and kind of be back in real time, but it's been a bit of a struggle for sure.
On the livestock side, we were down a decent amount kind of across the board for the cattle at midday. Is that how we closed here today?
Yeah, we are going to close down today. Fat cattle down $1.50 and feeders down $4. Overall, still pretty nice move here over the last 2 weeks or so. I really like the way that looks, especially on the hog side too. I would venture to say, sure feels like we're close to breaking out to the upside on the hog market, which is certainly feels overdue. But we'll certainly take it. Hogs closed up about 30 cents today, so relatively quiet. But overall, all three cattle, both cattle and hogs. Even though today was maybe a bit quiet, you like the price action a little bit better than we've seen, at least on the grains, certainly on the bean side. So feel pretty good about that going home today.
Kaden, what's the best way for our viewers to get in touch for more marketing information?
Yes, sir. Just go to our website, agmarket.net. Be sure to get signed up for the conference in Nashville, February 1st and 2nd. Going to be a good time. Always a big crowd down there. Plenty of great speakers lined up. I don't know what this is, year 5 maybe, continues to grow every year. So we're really looking forward to it.
Heard that from the team at agmarket.net that conference continues to grow. So congratulations to you and the team. He is Kaden Sweeney of agmarket.net, my guest here today. Thanks so much for the time. Appreciate it. Have a great weekend.
Yeah, appreciate you guys. Stay warm.
Thank you to Kaden Sweeney of agmarket.net for joining today's show. Let's take a look at the closing market numbers for today. And you can find that information under the markets tab of our website at iowaagnet.com. March corn closes down 5 3/4 at 440 3/4. January soybeans down 16 3/4 at 1076 3/4. January soybean meal up 40 cents at 302.50. January soybean oil down 75 cents at 50.07. Chicago wheat down 4 1/4 at 529 1/4. Minneapolis wheat down a penny at 5.76. Kansas City hard red wheat down 4 1/4 at 5.18. March oats down 5 1/4 at 2.86 even. On the Merc, December live cattle down 58 cents at 229.80. January feeder cattle down 4.30 at 339.10. February lean hogs up 35 cents at 84.53. February pork cutout unchanged at 93.75. Class 3 milk up a penny at 15.88. That does it for our closing markets and brings us to the end of today's show. You can find all of our content on our website at iowaagnet.com, including our daily Iowa Ag Matters podcast. And again, you can find that at iowaagnet.com. From the Iowa Agribusiness Radio Network studios in Des Moines, I'm Mark Magnuson. For Riley Smith and Dustin Huffman, you've been watching Ag Matters PM.